Hi traders, welcome to the new weekly forecast for the trading week starting on May 27th. As you are aware that in the recent week, the FMC meeting minutes, the main tone of FMC was hawkish, resulting in instant bearish reaction in the gold market. Now, what does it mean for gold? In the current week, gold has dived more than 5%. Now, is the bull run over, or is it just a temporary pause in the long-term bullish market? In today's video, I've extensively covered the gold's support and resistance with the probable future targets. So without wasting much of time, let's dive directly to the charts. So let's start analyzing the charts, and I'm going to start the week with dollar index. Now, before I begin, I've just made one change in my style of analysis. So now I'm using Fib tools on a line chart. So I've recently studied that if we are applying Fibonacci extension or Fibonacci retracement tool on a line chart rather than candlesticks, the potential levels of extension or retracement which are plotted on the chart with the help of Fib tool, they are quite accurate. So I'm going to use Fib on a line chart in today's video. So the first instrument is dollar index. I'm just going to clean the chart here, and I'm going to 3-monthly chart to understand the long-term direction here. I need to add MACD to see the divergence on the charts, and I'll be just making a small change. Instead of histogram or columns, I'll be using area here. That's it. So here we go with the long-term chart of dollar index. Now, based on wave theory, this is our first wave in the bullish direction, first impulsive wave, and it started with bullish divergence here. So this is the beginning of bullish trend, followed by second wave, which is the corrective wave. Then we have third wave here. Then we got fourth wave. And finally, we got the fifth wave, and we got the completion of fifth wave with bearish divergence. So it is hinting towards the end of this bullish wave or the bullish cycle, and we are expecting the downward trend. Now, usually, once a bullish or a bearish cycle is completed, based on Fib calculation, the retracement is usually 50%. So now I'll be plotting Fib retracement starting from the lowest point, and I'll connect to the highest point. So here we are expecting that dollar index should correct after this bullish cycle completion. It should correct at least towards 50%. So the probable target is here. So it is giving a bearish hint in the coming months. Now I'll be moving to monthly chart, and I'm also using a rising channel here. So I have to connect the rising channel. So I'll be connecting the lower points, and I'll take it to the opposite higher point. Now, if you notice here, this is the end of rising channel, the upper boundary, so which creates resistance. So here we have resistance, and we are expecting that dollar index should continue in the downward direction, and the first potential target is the lower boundary of the rising channel. Now I'm moving to the lower time frame, that's 1 month. Now, based on this monthly chart, I can see that dollar has started dropping, but after giving this massive downward push, it has gone sideways. Now it's ranging. So usually market creates a move, pulls back. Okay, so this is the usual pattern. Alternatively, we get some consolidation. So this is the alternative pattern, and we should expect continuation in the downward direction. So based on this consolidation, I'm hoping that dollar should remain bearish. Once the consolidation is completed, we should expect at least 38% as the first probable target in the downward direction. So this is my point of view for dollar index. Now let's see what's happening on daily chart. Now based on daily chart, I'm just going to mark the pattern here. So we have high, lower high, followed by lower high, then we have lower high, then we got bullish divergence in between. So this is the end of first bearish wave, starting from this swing high to this swing low. So I'm going to plot Fib retracement on this downward wave. So starting from swing high, I'll connect to the lowest point. Now we generally expect correction to the 50%. So this bearish wave ended with bullish divergence at the bottom. I need to shift, give me a second here. So I can see that the bearish wave ended with bullish divergence here, and the market has corrected to the 50%. Now we are getting ABC pattern here. So we can expect this is your wave A, wave count B, and this is wave C. But we are expecting sideways consolidation. So I'm expecting that dollar index should not, ideally, it should not go beyond 106.74, and it should remain bearish. This is my point of view. So after consolidation, it should continue in the downward direction. Now, based on the assumption that we have to start extension from the swing high, connecting to the first swing low, and this is going to be our end of correction at 50% level. So the potential downward target is 97.65. Current value of dollar index is 104.64. In the coming weeks and months, it should continue in the downward direction, and it should complete its journey at 97.65, which is also a confluence of the rising support from the lower boundary of the parallel channel. In the short run, we need to check 4-hourly chart. So I'll talk about the short-term pattern here. In the short run, we can have sideways movement. So we started from this bottom, completed ABC. We can expect ABC again, some consolidation, short-term ranges, and then it should continue lower. And the next instrument is Australian dollar versus Swiss franc. Now here, I'll be cleaning my chart and I'll start my analysis from daily. Now, based on daily chart, I need to understand the pattern first. So we have high, lower high, next lower high, lower high, lower high. So currently, we can see that the current price is right now very close to this resistance point here. And I've also spotted lower low formation with bullish divergence here. Now, based on L1, L2, this is our PUS. So the buyers are trying to reach towards this area. So the potential target is 0.6146. Now I'll be applying Fib extension in the bullish direction. So I'll start from the lowest point. This is the lowest point, and I'm going to connect to the first high and the next low point. So currently we are at 161 Fib extension point. I can see that there is some slowdown building. So we can see bearish divergence coming, and this is a usual pattern. So this is your first wave, your corrective second wave, or if this is your first wave, corrective second wave, then your third wave usually goes to 161. So currently we are at an important Fib resistance area, and I can see that slowdown is building up, and due to this bearish divergence, I'm expecting short-term bearish move in Australian dollar versus franc, and finally it is going to complete its bullish cycle at 200%. So this is your short-term plan, corrective pattern. Ultimately you should switch to buy, and you should aim for 0.6145. Now let's see what's happening on lower time frame, that's 4H. Now based on 4-hourly pattern, I can see that the market has developed low, higher low, higher low, higher low, higher low. This is again your turning point. Now the market turns bullish from this area and it creates higher low, and higher low. Parallelly, we have high, higher high, higher high, high, and next higher high. Now here we have turning point. So after this point, we got high and higher high. Now based on the bearish divergence formed between these two high points, I can expect short-term bearish price action. But currently, it is not creating a low below 1.61. In fact, it has taken support here. So there is a probability that it might complete its bull run to the fib extension of 200%. That's 0.6145. Then it completes a new bearish divergence and it may turn bearish. So either we can expect short-term pullback and then continuation, or it is going to complete its fib extension 200% cycle and then it turns bearish. So either of the two probabilities. But this is the final target. Now let's see what's happening on the lower time frame. That's 1 hourly chart. Now based on 1 hourly chart, I can see that we have a pattern of low, higher low, higher low, higher low, higher low. Continuously it's rising and creating higher lows. Now this is the only area where I can see low, lower low, and lower low. Again, I can see highs, higher high. This is the last high, and then I can see lower high. So only for the short term, I can see that we have some bearish price action on 1 hourly chart. So I can plot a bearish channel here, parallel channel, starting from this high. I'm connecting the downward channel, and the mid levels of the parallel channels are diagonal areas of support and resistance. So currently the buyers are blocked at the mid level, the dotted line, which is also a confluence of the previous resistance. So it's making a double top here. So I can see short-term bearish pressure on Aussie CHF on 1 hourly chart. Finally, when it breaks above the mid diagonal line, this will be the confirmation that buyers are back in the market, and I'll be aiming for 0.6145. That is the completion of fib extension 200% based on the higher time frame. So if you're getting involved into sell trade on short-term basis, you have to trade very, very cautiously because the higher time frames are still bullish. Now let's see what's happening on 15 minutes. Yes, definitely on 15 minutes, I can see that two higher highs printed with bearish divergence. So 15 minutes and 1 hourly chart, they are looking bearish. Only in the short-term plan, you can capture some quick moves, some pips here in the downward price action, but ultimately you should look for buying and aim for fib extension 200% on the higher time frame. So this is the plan for Aussie CHF. Now let's move to Pound Aussie, and again I'll be starting from higher time frame, that's monthly chart here. Now based on monthly chart, I'll remove MACD. Let me bring it back. I need to modify for better visibility. I'll just change from histogram to area here. Yes, so here is the long-term chart for pound versus Aussie. Now this is the lowest visible point. This is the next turning point, higher low. This is the next higher low. From top, I can see that it's continuously creating high, lower high, lower high, lower high, lower high, and lower high. So it has formed a triangular formation here. It is falling trend line from the top, and it has rising trend line from the bottom. And the current price is sitting at the boundary. So this is the boundary. So we are hovering at the boundary of this triangle. And I can see that there is some slowdown building up on the basis of histogram. That's it. This is the message on weekly chart. In the terms of support and resistance, I can see a massive resistance around 2.0. Let's move to weekly now. Now, based on weekly chart, I can see bullish pattern here based on wave count. So here we have, give me a sec, here we have bullish divergence. I'm comparing the lows here with higher low being formed. So bullish divergence comes into play. Buyers, they break the structure. Now we have first wave up, second wave down, longest third wave. Now we are in the fourth wave. So fourth wave is completed, and usually the correction in the fourth wave comes to 38% of the third leg. So I'm going to apply Fib retracement on the third wave. I'll start from the starting point of third wave, and I'll complete the retracement tool at the top of the third wave. And here we got first, second, third, and this is the fourth wave, so which has corrected precisely at 50%. So it has corrected towards 50%. So it has completed the correction at 50%, and I can see continuing type of divergence here and higher high being created. So this is the starting of the next wave, that is wave number 5. So the buyers, they have created a higher high, and now again they have retraced precisely. They have come back and taken support on the falling trend line. So this falling trend line is now providing support, and I can see sharp buying reaction here. I can also use Fib retracement to measure the pullback here. So this is the beginning of the bullish trend, the latest one, and I'm going to apply Fib retracement here. And on the basis of Fib retracement, the sellers have taken the price back to the golden zone. That's Fib retracement 61.8, and now I'm expecting the next bullish wave. Now, how to identify the targets here? Now, because we have 5-way structure, and I'll be using first, second, third, and fourth wave to apply Fib extension, and I'll be looking for the magnet zones here. So I'll start from the lowest point, I'll connect to the first high, and I'll join with the higher low after the pullback. So it reached precisely to 1.618. Now let's connect the next Fib extension from the starting of wave number 3 and end of wave number 4. I just need to use a different color here to look for the overlapping lines. So here, after 1.618 is done, we are expecting that market should complete the first cycle at 200% and the second, the green cycle, at 61. So this is the magnet zone, this area. So I'm expecting that in the longer run, because right now we are working on weekly chart, this is the target zone, so up above 2.0. And now it's time to move to daily chart. Now here, based on daily chart, if you notice, this is your impulsive move up, and now we are getting the lower lows. That's corrective pattern ended here, and I do not see bullish divergence here. We need to see a break above this level. If we get a break above this level, wait for the retracement and join the buyers, and this could be our first target, 1.9945. Currently we are at 1.92, so I'm talking about the potential setup of 700 to 800 pips, and the invalidation would be break below this area. That's 1.89. Let's move to 4-hourly chart. Now based on 4-hourly chart, you can see that we have double bottom here, and double bottom comes into play with bullish divergence, even the wider one. So here, this is going to be a triple bottom with wider bullish divergence, range breakout, BS completed, wait for the pullback, expecting pullback from this area, or maybe the buyers can just break the level and then come back for the pullback, and then we can join the buyers. So I can see some slowdown building up here. This could be short term, so you should buy on the dips. Now the next one is euro versus dollar. Again, I'll take you to the long-term chart. So I'll open 3-monthly chart here for euro dollar, and we have the pattern of bearish market here. We have high, lower high, lower high, lower high. Looks like double top here, and we have low, lower low, lows here, and the new lower low. Now when the market is running bearish, we need to compare the lows, and when we are comparing the last two lows on the 3 monthly chart, I can spot bullish divergence. So this bullish divergence is giving us the confidence that the buyers will take the control, and the first potential target is this high. Now I'm going to apply fib retracement. I'll start from this high and I'll connect to the lowest point on the 3 monthly chart, and usually we see that retracement goes at least 50 to 60%. So currently the price is blocked at 38%. So there is a high probability that the euro dollar buyers are going to take the price to the next level. That's currently we are at 50%. Then the next probable level is 61.8. So that's 1.1305. So current level is 1.08 and 50% mark is at 110. So the next potential target for euro dollar is 110, followed by 1.1305. So these are the important upcoming levels. Let's quickly move to weekly chart here. Okay, so here we go on the weekly chart. So it all started with bullish divergence here on histogram. We got the break of structure here, and once the structure is broken, we should apply fib starting from the lowest point to the highest point, and let's see how much is the percentage of correction here in the first bull run. So here we go with the fib application, and after this massive bull run, we got the correction towards 50%. And now the buyers are trying to regain the momentum, and I can see this is our next potential target, ranging between 112.35 to 1.1305. Based on histogram or MACD, I can see the market is now turning bullish. We have a bullish crossover here, and I can see bullish histogram as well. But we need to be cautious. This is the next important resistance around 1.0939, which needs to be broken. Okay, now based on daily chart, we have low, higher low, higher low, and we have high, higher high, and higher high, and I do not see any divergence being formed on this leg. I can see sequence of higher highs on price and sequence of higher highs on MACD. So if you get any dip in the upcoming days or weeks, it should be taken as an opportunity to buy. Now, because I'm expecting bearish moves in dollar index, so if dollar index remains bearish, then we can expect that euro dollar should move in the upward direction because they are inversely correlated. Now finally, I'm moving to 4-hourly chart, and here we have low, higher low, higher low, higher low, next higher low, and this is your corrective pattern. So again, we got a bullish crossover here with flat histogram. I just need to see higher high being formed, correction, and then continuation. So euro dollar, in my opinion, should be bullish, and you should grab the dips as an opportunity to buy. Now finally, I'm going to explain gold, and I'll be using line chart, and I'll be starting from 3 monthly. So here is the long-term chart for gold. Currently I'm on 3 monthly chart, and I'm going to apply fib extension in the bullish direction. So here we start from the lowest visible point on 3 monthly chart. Sorry, wrong tool. I need to pick fib extension. So here we start from the lowest point on 3-monthly chart. I'll connect to the first high, that's 1776, and I need to connect with 1054. So the first fib extension level is 0.618, precisely the price level of 1989, and the next major level is 2570. And if you notice on 3-monthly chart, there are no signs of slowdown. Histogram is clearly rising. We have bullish crossover of MACD lines, and MACD lines are also rising strongly. So no signs against on the 3-monthly chart for the gold buyers. Now I'm moving directly to monthly chart, and I'm going to apply the next fib extension. So I'll use the low created here, that's the high low, and I'm going to apply until this high, and this is our pullback point. So I'll be using second fib extension now. I'll start from the lowest. I'll connect to the first high and the first high low after that. I just need to change the color to differentiate the extension levels here. Now based on this blue fib extension, which is plotted on the next bullish wave, right now we are very close to the 400% mark. So gold has crossed 2358. We are currently slightly lower than 2358, and again based on monthly chart, I can see rise in the MACD lines, I can see rise in histogram. I do not see any bearish divergence here, so no bearish signs on 3-monthly and monthly chart. So long-term bullish plan remains intact for gold. Now it's time to move to weekly. Okay, now based on weekly chart, I'm going to plot the next extension cycle. So this is going to be our beginning of the next extension cycle. So I'm talking about this one. So this is first wave up, second down, third wave up, fourth down, and fifth wave completed here. And the bigger picture is here. This is your first wave, this is your second wave, this is your third wave, fourth wave, and now we'll be completing the fifth wave. So we are getting extended third waves on the long-term cycle here. So I'll be applying the next fib extension starting from this point, connecting to the high created here at bigger cycle 61.8, and I'll join the higher low. Let's use golden color here. So based on this cycle, I can see that gold is running towards 2496, that's psychological round figure number 2500, and the next major extension in 2570. So our plan that gold should touch 2570 or it should cross 2500 remains intact based on weekly chart. Now I'll also use rising parallel channel here. So I'll be plotting parallel channel, I'll be connecting the lower point, and I'll take it to the opposite high point. Now if you see, gold is sitting exactly on the rising channel's upper boundary resistance area. So gold hits the upper boundary resistance of the rising channel, and we can expect some short-term pullback towards this area. So we have a confluence of support between 2167 to 2242. So if gold retraces towards this area, it should be taken as an opportunity to buy and aim for 2500 to 2570. Now the next is daily. Now only on the daily chart I have spotted bearish divergence, which has developed recently. So this is higher high formation with MACD forming bearish divergence. Now this bearish divergence means that gold is under short-term selling pressure. So in the recent week, we got the hawkish statement from Federal Reserve, which means that gold should remain under pressure based on the hawkish statement, but only for the short term. Now, only if gold breaks this level, which is 2284, I'll just use a horizontal ray line here to define the level. So here, yes, 2285 or 86. Only if we see a break below this level, then expect retracement, continuation towards 2167 or 2200, and extension to the next level, that's 2496 or 2500. Now let's see what's happening on 4-hourly chart. Now on 4-hourly chart, I have not spotted bearish divergence, but definitely we can see that gold is under pressure. So this is massive selling. Gold has dropped around 5% in the current week, and the major resistance is here at 2358. We can also use FIB extension on the lower time frame in the downward direction to understand the levels. So here we go on 1-hourly chart, and I'll be plotting FIB extension in the downward direction. So I'll be using the recent most high based on line chart, and I'll be connecting with the first low and the first lower high. Let's change the color to red, and now we have the potential downward extension levels. So gold is right now in between 2.618 and 300. If it breaks below 300, you can expect continuation towards 2288, and you should take these levels, the 400% from the bigger bullish cycle, 200% of the current bearish cycle as your areas of resistance. So only in the short term, if you find an opportunity, like if gold rises to these levels, then these levels should be taken as opportunity to sell, with major level coming at 2398, psychological 2400 mark. So these are the reference levels for the short-term resistance, and then I'm expecting continuation to the next downward level, and finally continuation to the bullish target of 2500 and 2570. Now let's do one thing. Usually what happens when you get massive bearish reaction, it should complete its fourth corrective leg and move towards the next lower target. You will get some bullish divergence here. Right now I don't see bullish divergence being formed. Only on histogram we have lower low formation here with bullish divergence, but not on MACD lines, which means we can have some short-term pullback and then continuation in the downward direction. Finally, you can take that gold goes back to 161 and continues its next bearish wave. So ABC pattern here. If it so happens, then I'm just assuming that gold will complete its 400% cycle. It will go back towards 200% or 1.618. Let's say it goes back towards 4, and I just need to use a differentiating color here, so I'll use a black one, and I'm going back to 4-hourly chart. So I'm just assuming the potential levels here. So let's say gold goes and completes its touch of Beer's point on daily mark. It goes back for retracement and touches the level of 2358 to 2363 and resumes its downward journey. So this is the plan. So if it touches this level, goes back for retracement in the short run, and it will continue towards the 0.618, then the potential target is 2242. If it continues further, then we can see deeper correction towards 2196 or 2167, and then continuation to the upper target. Now, what happens usually after a massive bull run, if we get bearish divergence, either it corrects back towards the 50% of this bull run, or at times market gets into consolidation. So this is your bull run, and instead of moving downwards, gold will remain sideways, consolidation, and then it resumes its bullish journey. So I don't know in advance which pattern is going to develop, but either which ways, only in the short run I can see some bearish plan for gold. only in the short run. Ultimately, the higher time frame bullish plan is still intact. We can also measure the short-term pullback for gold on the basis of retracement. So I'll be starting from this low. Why this low? Because this is our first wave up, second wave down. I'm just measuring the correction on the third wave now. So if third wave enters into correction, let's see what are the potential levels. So let's use Fib retracement from this point to the current level, and usually market corrects 38% to 50% and then continues. So most likely it should correct towards 38%, that is 2195. So if gold does not get into consolidation and it goes for the deeper correction in the coming days, you should expect 2284 followed by 2195. Alternatively, it can form consolidation around this area. It will keep ranging above 2284 and then continuation to 2500 followed by 2570. Any which ways, I can see that 2284 is on the cards. So short-term plan should be to sell on the rise. I've given you Fib extension levels in the downward direction. You can use those levels as your resistance marks and get into short-term shorting opportunity. But ultimately, you should start collecting your the units, or you can start buying in smaller tranches for the long-term bullish plan. So this is the detailed explanation for gold for the coming days and weeks. I hope it adds value to your trading plan, and I wish you a profitable trading week ahead. Bye-bye.